The market opening is here and is absolutely quiet. The Nifty is now at 17,900. As far as the markets are concerned, extremely volatile. They've been choppy since we started the trading session.
The Nifty, after the initial 1.5 odd hours, not very much has happened.
The Nifty ends a little in the red, so we're down close to around 20 points odd. The problem today was Bharti Airtel, post that downgrade coming in from JP Morgan. It goes home with a cut of around 3.5%, and select pharma names and pharma-facing stocks, they got hit.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. Stock markets end range-bound session with marginal losses. Bank stocks buck the trend while pharma stocks drag. The Defence Acquisition Committee approves procurement of an additional 4,276 crore rupees worth of missile systems for the Army and Navy. The news helps vendors like Bharat Dynamics, BEL and Astra Micro to gain a percent. Restocking ahead of the Chinese New Year gives metals a further fillip as a V-shaped recovery buoys sentiment further. The optimism on demand outlook boosts metal stocks. Telecom stocks sulk as JP Morgan flags uncertainty of tariff hikes in 2023 as a negative for the sector. The brokerage also downgrades Bharti Airtel, pushing the stock 4% lower. However, the IT sector perks up after JP Morgan says the street expects better margins and lower attrition going forward. Adani Wilmar surges on healthy volume growth across segments in the third quarter. Sun Pharma receives a US FDA warning letter for its Halol facility, while CNBC-TV18 learns that Aurobindo Pharma's plant in Telangana is under inspection by the US drug regulator. Well, those are the top headlines that we are tracking today. But as always, let's begin with the action from Dalal Street. A range-bound session saw the market end flat with a slight negative bias. Mid-caps underperformed the benchmarks to close 0.25% lower. However, banks were the star performers, with that index soaring 0.5%. Metals led from the front, while pharma dragged. Prashant Nair is here with the wrap of all the trading action today. Prashant.
It was a small change in terms of close on the index, the Nifty, that is 20-30 points lower. There was a fair bit of volatility, but it was early on in the session, within the first 2 hours of trade. And after that, the market just kind of stalled, did nothing, and ended in exactly that fashion by 3:30 as well. Banks, which had been underperforming for the last couple of days, outperformed today. Let's see if this is just a one-day phenomenon or there is more. Bharti was the big loser in the Nifty, and that kind of weighed. The stock was down about 4% by close. Cipla, Divi's Laboratories were some of the others which actually lost. Metals as a pack did well. So Hindalco, there was BPCL, Sun Pharma. These are some of the names which actually did well. In the broader markets, advance decline was broadly 1:1. Actually, by close, it was more advances as compared to declines by about 150 odd stocks. So having said that, let me start with what did well in the broader space, and it was a long list. Tata Communication, names like NMDC, PTC, Marksons Pharma, Tata Investment Corporation, Greaves Cotton. We had that management of Greaves Cotton out of the Auto Expo earlier today. Sterling Tools, Nazara, Rate Gain were some of the others which did quite well. Broader market losses coming through in Varun Beverages, and lots of well-traded large liquid names trading down on volumes today. Adani Transmission, SRF, Sona Comstar, MRF, Loris Laboratories were a few which I think deserve some mention. What next? I think in terms of just level watching, 17,774 is the weekly swing low, which was made on the 26th of December. The Nifty today came within 50 points of it and then bounced. I think it's absolutely important that that level holds in the face of any selling in the coming days. And in terms of global cues, I think any real action will only pick up once we get the US consumer price inflation numbers, but that is only tomorrow. So I think it'll be Friday morning to get a sense of how global markets react and what our markets will do as well. Back to you.
Prashant, thank you so much for joining us with that analysis on the market moves today. Moving on to market opinion now, Ashwini Agrawal of Demeter Advisors says that the Indian market has been expensive compared to other EMs, adds that he remains positive on the banking space. Listen in.
I think some amount of rebalancing is happening because India, in the regional context or in the emerging market context, I dare say even in the global context, has been very expensive for a while, and therefore some rebalancing appears to be taking place. But like you said, it's a very, very short period, just a few days of trading, and we have to see how this evolves. I think on the institutional flows part, I think 2023 will be a challenging year, both for domestic as well as for international flows, is my sense. I've been very positive on the banking space. I continue to be positive. I think there is some fear of NIM compression as cost of fund increases. But my sense is that on the credit cost side, we are going to see positive surprises. So I still see earnings from the banking sector to be quite robust.
All right, that's the second, that is the expert opinion that is coming in. But moving on to the second headline now, the Defence Acquisition Committee has approved the procurement of an additional 4,276 crore rupees worth of missile systems for the Army and the Navy. The news helped vendors like Bharat Dynamics, BEL and Astra Micro gain 1%. Vaishta is standing by with more details and what it means for the stocks. Vaishta.
Well, not just Bharat Dynamics, but also other defense stocks are doing well in trade today. This is because, like you mentioned, the Defense Acquisition Council has approved the acceptance of necessity, and this is for 3 capital acquisition proposals summing to approximately 4,300 crores, and the 3 proposals include 2 of the Indian Army and 1 is of the Indian Navy. Now, this includes the procurement of Helena anti-tank guided missiles for launchers and for associated support equipment, which will be integrated to the Advanced Light Helicopter. Also, there is a procurement of IR homing missile system under the design and development by the Defense Research and the Development Organization. So all these new developments are expected to benefit the aerospace and the defense manufacturing industry, which includes players such as Bharat Dynamics. Back to you.
That's right, Vaishta. Thank you so much for those details. Defense sector has been in focus of late. Moving on to the third headline now. Strong demand outlook as China restocks ahead of its new year. In the face of tightening inventories have pushed metal prices higher. This has helped metal stocks continue their momentum. They have been gaining in the last couple of trading sessions. Manisha Gupta is standing by with the latest from the metal space. Manisha.
It's been a strong day for metals as we look at copper prices trading at a 6-month highs, not just on LME but Shanghai and the US markets as well. We also are looking at strong cues continuing in case of aluminum and zinc. The overnight markets did see 1 to 2.5% of gains, and for this year until now you have zinc prices which are up 6.5%, copper is up 4.5%, aluminum is up 4% as well. So strong start to 2023. Copper clearly essentially continues to be a favorite among all metals, where we are looking at the smelting activities in 2022, the lowest in 6 years. Also, the political unrest in South America, which is Chile and Peru, have led to lower production in case of copper. Markets do anticipate that the first half could see consolidation and gains, but the major gains could really come in for the second half when you would look at the interest rate peaking out, China reopening, having a strong on-ground demand coming back into the market, and EV as a segment looking at strong demand as well. As of now, the markets do believe that the strong rationing that we are seeing within Europe and the demand coming back will also continue to support many of these metal prices. If you look at the last 4 or 5 years, we've seen copper prices continue to gain since 2019. 2022 was a bit of blip by 13% of a decline, but this year yet again most of the metal prices are trading in the positive. The overall LME warehouse stock is the lowest in 25 years, with zinc inventories having declined by nearly 84%. Copper inventories have seen a constant decline. Aluminum inventories fell by more than 70% as well in the previous year. So we are entering 2023 with a bit of a deficit, and that is also supportive into the markets. What the street will now watch out for is the US inflation data, and ahead of that, because of the weakness in US dollar index, there is some support that continues into this space.
Manisha, thank you so much for telling us what's happening as far as the metal space is concerned. So let's take that theme forward, because steel companies are also in focus after JP Morgan said in its latest note that more steel price hikes are on the way. Nigel D'Souza is joining us with details of that note. Nigel.
Well, that's right. JP Morgan believes there are more price hikes that are likely to come about. They highlight the fact that Chinese prices, well, that had moved to closer to around $500 per ton. That's bounced back in style to around $620 per ton. And some deals are also happening at around $635 per ton. They believe that demand is likely to bounce back post the new year. Remember the price increases. Normally, it's a seasonally strong period, that November, December odd period. But this time around, it's got a little bit delayed. But they believe the best is yet to come in terms of pricing. They highlight that, yes, domestic prices are up by close to around 1,500 rupees per ton. But now the landed imported steel is coming in at around 60,000 rupees per ton. while the domestic pricing is at around 56,000 rupees per ton. So they see a good case that pricing can go up. Steel prices can move up by around 3,000 rupees per ton in the next 2 to around 3 months odd. They also take on board that, yes, coking coal costs are higher, which could limit the margin expansion from here on, but they're expecting good earnings recovery for the steel stocks. So that could explain why the stocks do well.
All right, that's all about the metal space. Nigel, thank you so much for joining us. And with that, we'll slip into a break now. But stay tuned, we'll be back in a bit with all the other headlines that we are tracking today.